All right, so in our next several videos, we're going to be discussing subtopic 30, split interest agreements, and that's related to topic 958, not-for-profit entities. We've already gone through subtopic 10 related to overall standards for not-for-profit entities, and we've done subtopic number 20 regarding financially interrelated entities, and so now we'll dive into split interest agreements. And so the way this subtopic is set up, the overall background provides us some good information on exactly what is a split interest agreement. So we will start there. So basically the scope of the subtopic is that it provides guidance for reporting arrangements under which a not-for-profit entity, which was defined in the overall scope section, in which the not-for-profit entity shares the benefits of assets with other beneficiaries, and that is a split interest agreement. So basically we as the not-for-profit entity are splitting an interest in some assets with other beneficiaries. And typically those beneficiaries are not-for-profit entities like we are. For example, the donor may give a not-for-profit entity the right to receive all or a portion of the specified cash flows from a charitable trust or other identifiable pool of assets that's held either by the NFP or by an unrelated third party, such as a bank, trust company, foundation, or a private individual. So then if the not-for-profit shares the cash flows with another beneficiary, that agreement is subject to the guidance in this subtopic because that's a split interest agreement. And so if the not-for-profit controls the rights to all of the specified cash flows from the trust or other identifiable pool of assets, then the agreement is subject to the guidance in paragraphs 958, 605. And that's because it's not, in that case, it would not be a split interest agreement because we're not splitting the interest with anyone. We have control of the rights to all of the specified cash flows. And so if there's a situation like that where we control the rights to all of the cash flows in a trust, then we would go to these subtopics, which relates to transfers of assets to a not-for-profit entity or charitable trust that raises or holds contributions for others. And so the general structure of a split interest agreement is that the donor enters into trusts or other arrangements under which the not-for-profit receives the benefits that are shared with other beneficiaries that are generally not-for-profit entities. And so a typical split interest agreement has the following two components. They have a lead interest and a remainder interest, and those are defined here in section 0505. And so the lead interest has right to the benefits, that's the cash flows or the use of the assets, during the term of the split interest agreement. And that term usually starts upon the signing of the agreement and it terminates at either of two times, after a specified number of years, or upon the occurrence of a certain event, maybe at the donor's death or the death of a lead interest beneficiary. And so once that term of the agreement has ended, then the remainder interest comes into effect, and they have access to the assets or cash flows at that point. So the remainder interest is the right to receive all or a portion of the assets of a split interest agreement remaining at the end of the agreement's term. So let's say a parent sets up a trust for their child, or any other situation where a trust is set up for a beneficiary, and the beneficiary can draw cash out of it over time for living expenses, but the agreement is at the point of that beneficiary's death, then all of the remaining assets would go to a not-for-profit entity, for example, maybe us. So the assets in the trust start out at $1 million, and the beneficiary draws out $5,000 a month every month for a while. And when they pass away, there's $500,000 left in the trust, and so that may go to us. So that's an example of maybe one type of split interest agreement in which we as the not-for-profit entity might have an interest that's split between the beneficiary and us. And there's several types of split interest agreements, and in the next video, we will go through each of these types of split interest agreements in detail. And then after that, we will understand in several other videos how to record these types of agreements from our perspective as the not-for-profit entity.